I find the harder I work, the more luck I have. Thomas Jefferson, President of the United States. TJ and Thomas Jefferson is absolutely correct. You make your way in this world. 10 to 15 minutes a day is all we ask for. That's what you need to commit if you are interested in learning how the market works. Being able to chart stocks. Remember, we're trend followers. We're not forecasters, prognosticators. We're not day traders trying to make pennies. We are watching for weekly vertical crossovers like the one we had back on the 1st of November. And but for one little pullback since then, saw a red spinning top, which just means a slowdown in the up movement back on the week ending the 6th of December. We have seen a rocketing stock market. Ended the day today up 0.94%. Again, the Q's up even greater, 1.67%. Amazing. And again, just phenomenal to watch. Look at that price percent oscillator on the weekly chart heading up. Derivative oscillator is flat, maybe losing a bit of energy, but again, a higher high, bigger candle. Candle is higher itself than the prior week. It's not a bigger candle yet. We'll see how things go on Friday. We go from the weekly to the 2-day. What do we see on the S&P 500? We see, again, a bigger candle forming. This is just the first day of this latest 2-day candle. We'll continue to watch, see what there is to see here. We see that the price percent oscillator had been going down, is going up. Derivative oscillator still losing momentum. Go to that 4-hour chart, and you can see where we had that hangover from about a day and a half, a down movement, and a doji at the end of the day on the last day of the year. Up in the morning, further up in the afternoon. Hasn't crossed over going up yet, but again, quite beautiful. And of course, if you jumped into the market on that recross going back in the same direction, somewhere around the 116 mark or so, how high have we gone since the 13th? That was Friday the 13th, which was a good day for a recross and a jumping in point using both the recross on the 2-day chart and the weekend or Monday effect from that 216 mark or thereabouts to a high of 324.89, almost 325. Not bad, is it, my friends, in a spate of less than 2 weeks. Quite nice. Well, when you take out all the days that the markets were either half days or closed. Now, we go from the weekly chart on the S&P 500 to the weekly chart on the Nasdaq 100 up 1.67%, rocketing. We see that the price percent oscillator heading up quite strongly. Derivative oscillator gaining upward momentum. We see the Heikin-Ashi candlestick itself higher. The high on the wick higher. We go to the 2-day chart. What do we see there? We again see a nice strong up candle forming. See if we can redraw that 2-day trend line a little bit. There we go. See what we can do about redrawing it, if we can get maybe a more accurate 2-day trend line. There we go. A little bit better. Trying to connect 3 candles like we always do, but we do see the 2-day chart moving up. Price percent oscillator heading up. Derivative oscillator about flat. We go to that 4-hour chart, and that's where we see the booming up in the morning and the afternoon, ending the afternoon, crossing over. So again, quite beautiful. Remember, we had that 2-day recross. Didn't happen as early as the S&P. It actually happened on Tuesday, the 17th of December. And of course, the buy-in point somewhere around the 209 mark. How high have we gone? 216.16. Is that not beautiful again? In a course of less than a couple of weeks. So again, these recrosses, these weekly vertical crossovers, the 2-day recrosses, that means the 2 days turned away from the weekly and then crosses back over going in the same direction. And of course, give us beautiful, beautiful jumping in points. So those trades continued to look so beautiful. Hope that you practice traded one or both of those. We now go to bonds. What are bonds doing? Well, bonds, like everything, were up for the day. Bonds up strong, 1.14%. Still have a weekly down candle forming with a lower low and a red down candle. Price percent oscillator still heading down. Derivative oscillator losing some downward momentum. Go to the 2-day from the weekly. What do we see happening? Well, we see a green candle forming, green up candle with a wick on top. Strong up movement, of course, from what happened over the course of the day on Thursday. Derivative oscillator still negative. Price percent oscillator still negative, but both are losing that downward momentum. Haven't crossed over there on the price percent oscillator. We look at the 4-hour chart. What do we see? It had crossed over going down on Tuesday. Of course, market was closed on Wednesday and then booms up in the morning, not quite as much in the afternoon. So again, we'll continue to watch, see what there is to see. The 2 days weakening, keep that in mind. The weekly is still decently strong on a down move. So we'll see if that's just an anomaly in 20-year bonds. Lastly, we go to gold. Gold up for the day 0.73%. Going into the 4th week of up movement in gold. Hasn't crossed over going up yet. We've seen throughout the course of the week the derivative oscillator has been positive. Will the price percent oscillator cross over on Friday? How high will Friday be if it goes up at all? We'll wait and see. Be patient. Let's see if there's a weekly vertical crossover. We shall see. We go from the weekly to the 2-day. Oops, not the 3-day, the 2-day. What do we see going on there? We see continued up movement as that derivative oscillator continues to gain momentum and that price percent oscillator keeps rocketing up above the Bollinger Bands as they stretch out with the volatility. Again, strong up movement underway. Look at that 4-hour chart. We saw things up in the morning and pulling back a little in the afternoon as they did on the 31st. Price percent oscillator still growing. Derivative oscillator continuing to lose upward momentum. So that's interesting to watch. So we'll wait, see what there is to see. Let these charts lead us. Don't have to be greedy, folks. You just have to be patient and follow the rules. If you don't know what all those rules are, we got lots of great training. If you're a subscriber to chartingwealth.com, guess what's in there today? The training you've been waiting for. If you've not had a chance to take it yet, it is the 3rd part of the 3-part training on options made simple. Part 3, how to practice trade options. That pulls together parts 1 and 2 if you want to supercharge your practice trading. How do you get all this information? You go to chartingwealth.com, sign up and subscribe for free, put in your name, email address. Sent out a whole bunch of books today, including Traders Journals. If you haven't purchased our book, Charting Your Way to Wealth, what are you waiting for? You want to know what it is we do here? It's there. 13th edition autograph copy sitting here in our offices waiting for you to order. We'll send it to you. If you live in the States, follow the link in the show notes. If you don't, email us at chartingwealth, cw@chartingwealth.com. If you happen to live overseas, for some reason, Square will not clear those foreign credit cards, but we'll send you a PayPal invoice, send you your book wherever you are in the world. God bless, my friends. All the best. Oh, Patreon members, check your email. We did the quarterly chart review for you at the end of 2019. Went out today to all of our Patreon friends. If you want all the special trainings we do for Patreon supporters, that includes the monthly question and answer call-in where we do even more in-depth training based on the questions you ask and the concerns you have, plus just all the other great stuff, short chart training, quarterly chart training, Bitcoin training, all the special charts and trainings we have for our Patreon members. It starts at only $30 a month. That's $1 a day. Aren't we worth that? God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.